Okay, part 3, your accounting system. So this is Yves Rosie. I had never heard of this person, but because I was on this sort of Grand Canyon Vista kick, I wanted to find something with Air Force One, and instead I find this guy looking at me. And there's actually a video. It's quite interesting and fun to watch, but as part of the landscape, you've got to have a system to get across to that, and I hope this isn't your system. I'm going to give you a quiz, and then we'll take a quiz now, and we'll take another quiz at the end of the session. We want to talk about, when you're setting up your accounting system, I just want to get a feel for your knowledge of accounting so far, and I want to see if you can help me identify these costs which are either direct or indirect, because that's a pretty basic part of accounting. So let's start with the first one. Materials for the contract deliverable. Is that a direct or an indirect? Direct. Okay. Design a CAD consultant. Travel to demonstrate the gizmo you contracted to develop.
Depends on whether or not they put in the contract that they wanted you to come demonstrate the gizmo.
Amy, you could work for me. You're doing good. Okay. Engineering labor? Depends. Sales call expense. I'm getting those. Metro expense on your way to the congressional office. Commission on sales. Administrative staff salary. Lab space rental. Let's go through these. We were right on direct cost for materials. Design CAD consultant. That would be a direct cost unless it's internal research and development, as our West Lafayette group indicated here. Travel to demonstrate the gizmo. Amy's right on here. It's a direct cost if the demonstration is a requirement. Did you read this ahead of time?
No, I didn't. I promise.
Oh, okay.
I've gotten caught up.
I know. VJ's had access.
I got away.
So, engineering labor. It could be a direct cost if it's not IR&D. Sales call expense would be indirect unless there's alcohol involved. And then the whole thing is thrown into unallowable. So the auditor says, David, I see here that there was this meeting that you put the alcohol, you pulled the alcohol out and you put that in the unallowable category. I said, yes, that's our policy. And the auditor said, well, I don't want to pay for this meeting. Why are you drinking on company or on government time? So that was the argument. So the company I was working with said, why is the government asking me to have a meeting on my own time? I should be able to drink without having a government meeting involved. But instead, well, you see how it goes. The whole thing was thrown out, so just be careful. I would recommend that you have a policy that says no alcohol involved, and if there's alcohol purchased, then make sure that the individual buying it pays for it themselves, and that that's not even included on the receipt, because the whole meeting could get thrown out. Commissions on sales, indirect. Administrative staff salaries are indirect. Lab space rental is an indirect, unless it's a very specific kind of lab space that you would only be using for a particular contract. And then we had one in Griffin where we rented just one room because it was some very specialized large equipment for one contract only, and we expense that as a direct cost. Okay, so your accounting system is a set of somewhat like post office boxes in accounting where costs, revenues, assets, liabilities, and equities are accumulated. You may be familiar with these groupings: assets, liabilities, equities, revenues, cost of goods sold, expenditures. Revenues, you must be able to designate specific job or contract, separate government contract revenues from product sales, service revenues, other revenues. Just part of your accounting system. Cost of goods sold, same thing, have to be able to designate a specific job or contract, separate government contract, cost of goods sold from product cost of goods sold, service cost of goods sold, and other cost of goods sold. And that's true for not only the direct cost, but the indirect cost. So once you're a company that has an actual product that's up and going, then you may need to set up like a manufacturing overhead rate to capture the overhead costs associated with that particular Expenditures include such things as fringe and facilities, which are allocated, and I'm talking about allocations, general administrative, sales and marketing, bid and proposal, internal R&D, and then unallowable. So these are sort of general categories that you're going to be wanting to track in your accounting system. And sometimes other businesses don't set up specific categories for some of these, but I find that it would be very useful for you if you did. Okay, a sample chart of accounts is provided on the Indiana Defense Technology website. That's a little bit of a modification of the one that I use. So I think that you'd be able to adjust it for whatever software that you're using, or get some help with that. But it's pretty handy. I think you'll find that you won't have to reinvent the wheel too much. What are allocated expenses, pools, and what are bases? You hear these terms. These are cost accounting terms. What I find, folks that understand cost accounting that are sort of CPA type normal cost accountants, they tend to take groupings of expenses, and when they're looking at their cost and they want to sort of allocate those, which we'll talk about in a minute, they tend to look at the total revenue and allocate costs based on where the revenue is. But when you're doing government accounting, that's not what you do. In government accounting, you have these pools of costs and you allocate them according to other costs. So other input costs. We'll go over that. An allocated expense is a cost accounting term. General idea is to take a group or pool of similar expenses and fairly distribute them proportionally over a grouping of other expenses, which is a base. For example, fringe benefits. You got a pool of fringe benefit expense, employer paid health care, insurance, state federal unemployment, Social Security, vacation and holiday time. These are all little line items for fringe benefits, and that becomes a pool. Then you take that pool. You've got a base. You want to divide up that pool of expenses over total labor cost in this example for fringe. So you're going to proportionally divide it among your labor for COGS, your labor for sales, G&A, unallowable, and your total labor cost should absorb 100% of your fringe.
It's unallowable labor.
Unallowable labor is the time that you spent when you were traveling to the congressional office asking them to give you an earmark for $6 million.
Or the time you spend drunk working.
Or drunk working.
And alcohol's involved.
Yes. Now, a lot of people don't think that there could be unallowable labor, but there certainly can be unallowable labor. And you need to have a category in your accounting system, and it wouldn't hurt to hit it once in a while just so that your auditor knows that you're watching yourself. Okay, in the fringe benefit example, I'm using an example of a fringe pool of $4,500. You've got a fringe, let's say this is on a monthly basis here, fringe labor base, total labor is $14,000, fringe rate equals pool divided by base, so you got a 32%. That's what your fringe rate is. Now, how does that apply to a billable? Let's say during that month you had direct labor at $54.50, and you've got a fringe rate of 32%, so you're going to apply that to your billable, which is $17.44. So when I say the government wants to pay for all of the cost, their fair share of the cost, this is how they do that through allocations. So there's several allocation types, cost pools that you're going to want to think about. Not all companies do them the same. There's a labor overhead pool that could include the fringe pool, the facility pool. Sometimes you put those two together, you have a labor overhead pool, and the base would be all labor. Material handling cost pool is something that a lot of the local companies here, startup companies, wouldn't normally use. But if you're manufacturing and you have a lot of materials going through, you may set up a pool just to handle the cost of material handling, and the base of that would be the product direct costs, or the direct cost of the product that you're selling. General administrative pool is your total input cost base, which the administrative pool would include finance, accounting, legal costs, corporate pushdown costs. If your company is sort of owned by another company, push down costs, and you can bill the government for some of those. Sales and marketing pool, G&A, is the same as the G&A. Bid and proposal pool is the same as G&A. And then the internal research and development pool. These all use the total cost input base. So, one of the pitfalls is that many companies propose their phase 2 SBRs without adequately forecasting costs other than the direct cost of the product. This is something that I've seen multiple times where companies have gotten through the phase 1, they've survived, their company's going, but they still, because they're on a phase 1, and it's a firm fixed contract, they really haven't kept track of what their costs are. So when they're in the middle of their phase 1, they put together this proposal for the phase 2, and they just lowball the G&A. Well, I even had a company come and ask me to help them to manage the finance accounting for their phase 2, but they didn't have any money to pay me because they didn't set up their overhead rate significantly and significant enough, so I couldn't help them. Well, I think this was probably enough for sort of an introduction to the pitfalls of government accounting. I'd like to take time for some questions for just a minute, but before I do that, I wanted to, well, first of all, say thanks for coming, but those of you can get on to the website, and at the very end, I've given some information about innovation resources and some of the things that we do and how we do it. I don't want to take your time today to go through these, but do know that these are here to give you a general idea of what my background is and what we do at Innovation Resources. So I'll take some questions at this time.
I have a question that drives me nuts with our accountant. The SBIR, if you could clarify it, it says that over a certain dollar amount it can be a piece of equipment, and over a certain dollar amount is a supply, but then the tax account, we got everything with annually, is something totally different.
Right. So the question is the category of an equipment item, and the SBIR contract says at a certain price level it can be just merely expensed as a supply. At another level, it can be it has to be shown as what? As an equipment item? Okay. And then the tax account has another view of that. Well, first of all, and what is the nature of the SBR, or what type of agency?
We work for Akina Research Polymers.
And the agency that gave you the SBR, is it a DoD agency?
I'm not sure.
Okay. Well, it varies a little bit by agency, but predominantly this audience is DoD. So I would say that, assuming it's a DoD, the DoD would say this: at a certain price level, expense it as a supply item. At another level, expense it as an equipment item. In both cases, and your tax accountant is going to go crazy here, but in both cases it's going to be a cost of goods sold equivalent. Now, the government owns that, so it shouldn't be showing up on your financial statement as an asset owned by you. It should be expensed right off the bat because it flowed through your system, and you shouldn't be depreciating it or anything because you don't own it. So just get it off of just expense it at whatever cost. And SBR wants to know, well, do you expense it as a supply or as an equipment item? The reason they're asking that is that DCMA, if it's over a certain price, they want to keep track of that equipment item. They may want it back. But in either case, on an SBIR, would that be considered your own equipment? There are some agencies, like maybe an NSF, that might say, in some cases, okay, well, we'll just let you keep that. But in most cases, almost always, the government owns that equipment. I can